Welcome. It's day 3 of the Wall Street Crossover Show. The date 22nd of April. I'm joined by Mr. Darren Sinden, market commentator for Admiral Markets, and indeed the sponsors of the show. Darren, how are you doing?
Yeah, very well, Nick. Thank you.
Wonderful. Just to reiterate, this is sort of, we go through the, I suppose, a new phase. Okay, if anyone's got any comments, any thoughts, tell your friends. It's day 3. We're open to
suggestions.
Suggestions. Yeah. I think that's good. Okay, let's kick straight in. We've got a number of slides. Let's talk about what's been going on in Europe, and then we can talk about the US. First slide: data released over the European session. Over to you, young Darren.
Okay. Well, we'll look at first of all something that happened just prior to the European session, which was the Australian CPI, or inflation data, if you like, coming out down under, and it came in slightly ahead of forecast.
Okay.
The reason that's important is, if you might recall, the Reserve Bank of Australia has recently been cutting rates, but the perception is now, with inflation actually showing some signs of life, maybe further rate cuts can be deferred. That's potentially good news for the Aussie dollar against other currencies. So some positive news there.
Okay.
On the subject of interest rates, we heard from the Bank of England in the form of the Monetary Policy Committee minutes from the previous meeting. Interestingly, a slight change in stance from the committee there, 9-0 for no rate rise, so no chance of a rate rise last month. However, or indeed any QE, but however, 2 members of the committee were what they described as finely balanced, and if you read into that, they were leaning towards a rise.
Stunned by that.
Well, so I'm slightly surprised as well, given the inflation data, but people are interpreting that to possibly mean that there might be a more hawkish tone emerging within the MPC. That said, I haven't seen anyone predicting an earlier rate rise than sometime in 2016. Certainly not going to see anything this side of the election, and probably not in the immediate aftermath of it either. So watch this space, I think, is the answer there.
Okay. Let's move on to the next slide, which is the FTSE 100 movers and shakers.
Yes, some interesting news today. Rolls-Royce, who you'll remember last week won the biggest contract they've ever had, announced a change at the top that's going to be effective in early July. And Warren East, who many people remember as the former chief executive of ARM, the chip maker, is coming in to take over at Rolls-Royce.
It's always great to see a stock move up as somebody's employed, because normally somebody gets canned and a market rallies, doesn't it?
Yeah, well, I suppose the previous CEO, I wasn't expected to leave, was going out on a high on the back of that order, and Warren East obviously is a strong follower in this city, and you can, the price move tells you that people are pleased to see that he's going there. Not doing quite so well, however. One of Britain's largest retailers, Tesco, down 2% on the day, although having said that, they were up in the early.
They're up 2%, weren't they?
Well, they've had a bit of a swing around, and the reason for that sort of volatility is that the company's taken a £4.7 billion write-off on its property assets, part of a total £7 billion charge, which people are talking about as kitchen sinking the business. In the net was that they reported a £6.4 billion loss, one of the largest losses, that's ever been in UK corporate history. I think that puts it in the top 5. That said, there has been some positive news for Tesco. Kantar are saying that they are amongst the best performing of the UK retailers. So difficult sector, but they're clearly taking the right action. It's not going to be easy from here, but it shows the determination with David Lewis and the management to get things right from Tesco.
Understood. And Ashtead Group?
Yep. Well, they're down on 3% because of their peer, United Rentals, in the States, cutting its 2015 earnings guidance. Ashtead, for those nearly doubt, is a plant hire firm. A lot of their business in the US. So when a US competitor guides lower, we take notice on this side of the Atlantic, and so they're down 3%.
Understood. Okay, so let's move on to M&A, rumours and movers.
Not new news. We did touch on this briefly the other day, but the Comcast-Time Warner merger is on Capitol Hill. The sort of feedback leaking out of Washington, if you will, is that the officials that are going to be ruling on this are leaning towards blocking the deal on competition grounds. Obviously, Time Warner's not had a particularly good time of things. Remember, it merged with AOL, seen as a disaster almost immediately as it happened, and they couldn't wait to undo that. It doesn't look like it's going to get together with Comcast now. It's a $45 billion deal if it went ahead. Time Warner's up 11% year to date. I wonder if there might just be generally a sense of relief there if the whole thing just went away. It's not going to be the end of that sector, though, because media companies do want to merge content and connectivity. The Federal Communications Commission and the Department of Justice, they're concerned about consumer choice and access, but I think some form of consolidation will happen going forward. Possibly not though at this scale.
Okay, so in terms of US data points today, anything?
It's not.
It's been very quiet this week,
Strange
isn't it?
week, isn't it? But we've got weekly MBA mortgage application, right, and a 30-year mortgage rates data. So we're looking for a 4% gain in mortgage applications, and 30-year mortgage rates to have eased very fractionally by just 5 basis points. More housing data. Existing home sales for March, month on month, is the figure to look at here, and we're expecting a 3% gain versus a 1.2% gain last month. And crude oil inventories, looking for a build here of 2.8 million barrels. Obviously, we'll have some effect on the price of oil, but I suspect the external supply is more of an issue these days than local inventories. And in terms of earnings, well, we had 140 companies reporting yesterday. It's
190 today.
190 plus, in fact. Coca-Cola just out there apparently managed to beat Boeing, AT&T, and McDonald's, some of the more familiar names. eBay, Facebook, and Qualcomm to come. Interesting to note that Qualcomm's rival Broadcom reported last night, and as we'll see, they did very well. Facebook, obviously, a lot of attention on that because it is the flagship stock for social media in the world at the moment.
Understood. Okay, let's wrap up with the US pre-market movers and levels.
Okay, well, Yum Brands, owners of KFC and a number of other fast food outlets, up 4.98% in pre-market trading. They posted after the close last night, beat estimates. Sales were a bit mixed, but broadly better. As I mentioned, chip maker Broadcom, they again reported after the close last night, up 5.8% in pre-market.
Strong guidance. Markets love that, don't they?
That's the best thing. Yeah, if you ever see a company, especially when it's beating and it's issuing guidance going forward, strong guidance going forward, particularly in America, they do love that. In terms of levels to watch today, a couple of levels here in the S&P. To the downside, 2087, to the upside, 2110. The Dow similarly 17,130 and 18,035 respective levels. Euro dollar, more to the upside here, 108.50 and then 109.25. So people are sort of backing the euro dollar strength, particularly with amongst my analyst friends. Aussie dollar, well, we already said, lack of a rate cut is bullish for that, and so look for move above 78.50.
Upside.
Range in dollar yen, 119 to the downside, 120.10 your upside level to watch, and in cable, as we said before, it's likely to stay range bound ahead of the election, but 149.13 and 150.18 are the respective downside and upside levels to watch.
Okay. That was a very quick 8 minutes or so, wasn't it?
I think it was, Moose, yeah.
Well done. That's Darren Sinden, market commentator for Admiral Markets. Thank you for the Wall Street crossover show. We'll be back same time, 1 o'clock for day 4 tomorrow. Have a good day. Thank you.